Markets are going up, but we're getting this decline in money flows, and eventually the market would catch up with that. So again, that's kind of what's happened here the last couple of days. We had that negative divergence between money flows and the rising markets, and now markets are trying to start to realize that, hey, there's not enough buyers out there. We've got more sellers showing up. So we're getting a little bit of a correction here. Again, nothing major to worry about here. Again, a little bit of a pullback here would not be surprising. Here's what you need to know before the bell this morning. I don't know what's going on. My screen has been red 2 days in a row. Haven't seen that in forever. But yeah, the markets are pulling back here just a smidge, very slightly. Again, we've had 107 days now of the market's moving with less than a 2% move in one direction or the other. In other words, we're having a very low volatility move in the markets. 107 days isn't the longest stretch, but it's getting up towards a very long stretch. We've also had 5 straight months of gains, which if we finish out the month on a positive note, which looks like we will, we've also had 5 straight months of positive gains for the markets. That is a long stretch. 5, 6, 7 months are very long stretches of positive gains in the market. So again, doesn't mean markets are going to crash. I'm not saying that. It's just quit extrapolating what I'm saying. But I am saying that, when you have 5 months of advances, typically you're going to have some give back here to some degree. So again, not surprising. Last couple of days having a little bit of a pullback here, trying to come down, touch this 20-day moving average. That's been running support. Right below that's the 50-day moving average. So again, that's also big running support here. Below that, you get a little bit more, concerning because you got the 100 and 200-day a good bit lower. But we are starting to work off some of that overbought condition. That was one of the things that we've kind of been talking about previously. Momentum is weakening in the markets. Breadth is kind of weakening. And again, remember, we talked about just a couple of days ago, we said, pay attention to what's going on because the markets are going up, but we're getting this decline in money flows, and eventually the market would catch up with that. So again, that's kind of what's happened here the last couple of days. We had that negative divergence between money flows and the rising markets, and now markets are trying to start to realize that, hey, there's not enough buyers out there. We've got more sellers showing up. So we're getting a little bit of a correction here. Again, nothing major to worry about here. Again, a little bit of a pullback here would not be surprising. But we're seeing stocks that, kind of getting a pullback here that have been the biggest winners. So we've had very big runs in stocks, particularly in some stocks, retail favorites, meme stocks. Those are getting hit harder than the overall markets. So again, just kind of something to pay attention to. Outside of that, one of the other kind of interesting things going on is, as we've talked before about oil prices, and oil prices have been kind of, staggering along here, not doing a whole lot. But again, when you take a look at oil prices, like I said, they've been pretty flat, not really doing much at all. Now, this is the input, as we've talked about before, into energy stocks, right? So oil prices are where energy companies derive their profits from. So again, just at least worth paying attention to the fact that oil prices really aren't doing a whole lot. We are on a buy signal, and relative strength is trying to pick up. So maybe we're going to get a little bit of a move higher, but we're trading around $64 a barrel. That's pretty much been the case for the last couple of months. However, take a look at what's going on with energy stocks, because energy stocks are starting to get a bit of a breakout here. And let me get a little different chart here. This is kind of what's going on. We've got a nice little breakout in XLE. So this is the energy ETF. Even though oil prices have been trading flat, which are, again, that's the input that feeds into the profitability of oil companies, and there's historically a very high correlation between XLE and oil prices. Starting to get a little bit of a break of that. Energy prices have been rallying nicely. We got a golden cross going on right now. The 50-day starting to cross above the 200-day moving average. So that's all very bullish. We're starting to get a turn up in relative strength, but a little bit of a move higher in oil and energy stocks. We're going to get a bit of a breakout of this consolidation that we've been in here for a while. So again, energy stocks yesterday actually had a very good day. While the market was selling off, we've talked about this rotation that occurs in the markets. You kind of go from offense to defense. Well, energy stocks have been on that more defensive side of the ledger, right? Lower volatility. They pay decent dividends, pay well dividends in a lot of cases. But they've kind of been the laggards to the market. So we're starting to see a little bit of that rotation from the high risk beta momentum trade back into some of those more defensive names. We saw that yesterday. But again, just kind of keep an eye on energy stocks here, because this divergence between energy stocks and oil prices is interesting. But there is a bit of a bullish story developing behind energy stocks as well. So kind of keep an eye on that. All right, that's what you need to know before the bell this morning.